primary reasons, right? And see, even in other clients, I'll say though the customer advance as a concept, I think, is reducing. I think 2 years ago, when there was significant pressure on the supply chain, I think there was a tendency to sort of accumulate inventory to secure the inventory, right? And customers were happy to give those advances to us. But that as the supply chain is easing out, we will see that the number reducing. What we should see as a corresponding offset is also that inventory days reduces for us, right? That is one part of the question that you asked. On the other one, yes, absolutely. As the mix of the business changes, if you get the other customer orders in place of orders like the one we spoke about, yes, the margins will expand. But we are continuing to work. It's a key client for us. We will want to continue working with them, right? And so, but as a mix, as a percentage, will definitely not be as high as what it is today.
Okay. One last question from my side. I don't know if you want to answer this question. Any indication of potential guidance of revenues or margins for next year that you would like to communicate, or is it something you don't want to talk about?
I think, Venkatesh, we maintain that on a 3-year basis, we will have a 30% sort of a CAGR in the past, right? And we'd like to just stay with that at the moment.
Okay. Thanks a lot. All the very best.
Thank you. The next question is from the line of Meet Jain from Motilal Oswal. Please go ahead.
Yeah, sir. Thanks for the opportunity. So as the previous participant earlier mentioned that because of reducing order book consumption of DEL, our margins are going to improve. Also, in previous quarter, we mentioned that all the strategic investments has completed. So can we assume that from FY25 onwards, we will have a good around 11%, 11-12% kind of margin which we used to achieve in FY23?
Yeah, we do have a line of sight to improve margins from here on, but that will be on a full year basis. We will have some sequential sort of softness in the first couple of quarters because of the way the business is, right? I think we have roughly, if you see our business, 45% of our revenue comes in H1 and about 55 in H2. So on a full year basis, yes, your assumption is correct. It might not increase as much as you are saying, but we will definitely see a line of sight of improving the margins from where we are today.
Okay. So another question is on our revenue mix this quarter. Like we are seeing a higher growth in defense segment, almost 78%. So can you just bifurcate this between the international orders or domestic orders? And is this also includes the BAL orders? So I was asking this revenue mix which we shared in the presentation, that 56% is being contributed by the defense segment, and which also saw growth of almost 78%. So can you bifurcate this between how much is the international mix and how much is the domestic mix?
No, I think our export to domestic ratio is 2/3 to 1/3 today, right? 1/3 of our business is domestic. We see higher wins from exports, so we see that increasing. It's difficult to give a percentage prediction of where this number will land next year, but we see higher traction in the export business.
So I want to ask you, what drove a strong growth in the defense segment? Like it increased to almost 56%. So I just want to ask, our defense segment this quarter grew significantly by almost 78%. So what was the main reason? Like any big order execution happened? Was it international or domestic?
What is driving our defense growth?
So the defense growth is, at least the part that we're seeing right now, is being driven by some of the opportunities that we have in the Middle East and in India. That's driving it today.
Okay. Thank you so much.
Thank you. We have our next question from the line of Rakesh Wadhwani from Monarch AIF. Please go ahead.
Thank you, team, for the opportunity. Sir, can you talk, sir, a few data point questions. Can you please tell us the amount of customer advances for the year ending? Absolute amount.
No, what did you want? You want first number of advances? Amount of customer advances for what?
advances at the end, advances from customer. So last year, that number was 202 crore, which is mentioned in the balance sheet schedules. So what is the number for this year? Yes. Sir, last year, in the balance sheet was mentioned, the advances from the customer was 202 crore. Can you please talk about that number at the end of the year, end of this year? What is that number?
Yeah, I don't have that number readily available with me. We have reflected that at the end of Q4, we have 25 days of advances, so we can do a quick math from there backwards. If you want separately, we can connect and I can share that number with you.
Okay. And sir, second question on the IPO funds that we raised. So this year we utilized 79 crore for the working capital purpose. Just wanted to know what will be the future treasury, because from next year we will be we'll be earning good profit. This year also we earn profit. Next year we'll be earning profit. So the major chunk of the working capital requirement that is required in the coming years will be funded from the internal resources only. So there will be always huge amount of 150 to 100 crore cash on the books every time. Is there any thoughts on that?
No, I'm really unable to hear. I don't know if it's the audio at our end. Sorry about it. I think I got the gist of your question. You're basically asking what is the trajectory of the net working capital. Is that what you want to understand?
Yeah, I just want to know what the utilization of.
Mr. Wadhwani, sorry to interrupt. Can you use your handset mode, please?
Yes, sure. So just wanted to understand the utilization of funds in the coming years, because there will be a huge amount of cash in the books as we are progressing, making good amount of profits. There will be a huge cash flow also inflow.
Yeah. So we have consumed about 100 crores of cash this year, right? And then when we went IPO and we put on the proceeds, and we had about 300 crores roughly earmarked towards the working capital requirement. Then we have certain other objects of the issue earmarked towards M&A and some for general corporate proceeds. Whatever was earmarked towards repaying the external loan, we have already done that. So a lot of the money that is left in the books now from the IPO proceeds, I think half of it will go towards the working capital usage, and the remaining towards CapEx, general corporate proceeds, and M&A.
Okay. Sir, any guidance on the working capital? I think you mentioned 90 to 100 days net working capital cycle maintained at the end of FY25. Is that understanding correct?
Yeah, that is correct.
Yeah. Okay. Thank you. Best wishes.
Thank you. Ladies and gentlemen, we request you to please use your handset mode while asking a question. We'll take the next question from the line of Deval Shah from RBSA Investment Managers. Please go ahead.
Hello.
Yes, Mr. Shah, please go ahead.
Yeah. So my question is with regards to the box build. So I understand that it is a reflection of the order book, but it has fallen from 35% to 25% in this year. So any comments and insight on that? And second question is with regards to during the previous call, you mentioned that we are in an advanced stage of discussion with one of the potential acquisition. So any progress or any update you want to give on that inorganic expansion?
Sure. See, look, from the box build PCBA mix, right, I think we really, as I said, right, we don't have any particular preference. I think these are driven by program-specific requirements and customer preferences. A number of times, the customer prefers to do the box builds themselves. I think they're using the PCBA that we develop. From our perspective, frankly, there is no difference in the margins we make on a box build versus a PCBA, and we are happy to sort of help the customer with whatever they need, right? So we don't have a preference one way or the other. I don't think we should read too much into that mix change. I think the only variable in that is the cable harness. As that business increases, you can start seeing better margins because that business comes with higher margins because it's more headcount intensive, right? So between PCB and box build, I really not read too much into that one, right? That's one part. On the second one, I think the progress is well. We are still in the process, so we really can't tell you at what stage we are in, but it's progressing well. Anthony, you want to add anything?
Yeah, exactly as Srinivas, highlighted. What we can disclose is that we are pleased with the progress, and we hope to have an update probably on the next call on the specifics of what that looks like. But again, this is something that will add, capability and geographic aspects to it, where we can, have a impact on what we can bring our current clients and new clients as well.
Okay. Thank you.
Thank you. We have our next question from the line of Abhishek Jain from AlfAccurate Advisors Private Limited. Please go ahead.
Thanks for the opportunity and congrats for a strong set of numbers in fourth quarter. Sir, we have seen a decline in the industrial segment revenue in FY24. How do you see recovery ahead? Sir, we have seen decline in the industrial segment revenue in FY24. So how do you see recovery ahead? Hello?
Srini, did you catch that question?
No, we did not catch the question. All we heard is about something declining, and how do we take it?
Decline in the industrial segment in FY24. How do we see the recovery?
The industrial segment. So that is correct. We did have some declines in the industrial segment. That was due to a key client, and we actually do see a recovery in that sector overall, and also we expect to see some growth in that sector with some new clients as well. So that is a sector though that we do see growth in, even though we did have one client that did degrow.
And sir, we have seen a sharp increase in the gross margin in this quarter. Is it because of the better client mix or product mix? And will it be sustainable in the coming quarter?
No, I mean that really depends on the product mix, right? Like you rightly said, it's a favorable mix this quarter in terms of the revenue from the non-India customers being higher than what we have seen in the earlier quarters. So it's very hard to say what is sustainable, because that mix will continue, right? I think depending on what that mix is for any given quarter, that number can change up or down. So, but what we can say is for the full year, I think we will see some improvement in the gross margin, and that's what we can sort of talk about.
Okay, sir. And my last question on the export side, in this quarter we have seen a very sharp improvement in export numbers. So just wanted to understand what is the reason. And second, how was the mix in FY24 export versus domestic in revenue?
Yeah, it's roughly 2/3, 1/3, right? I think if you see the full year, we did share that slide earlier, compared it with the earlier year as well. It hasn't changed much from a year-on-year basis, but in Q4 there were higher exports compared to domestic, right? We expect the export business to be higher in FY25 as well compared to what we have seen in 24.
So can we assume that it can increase to the 40-45%, and that's why the margin will also jump up?
No, I mean, it will not dramatically change that much, right? I think if you are at 66 to 34, it might go up to 70-30, but that's pretty much what it will be.
Okay. Thank you so much. That's all from my side.
Thank you. We have our next question from the line of Mihir Manohar from Carnelian Asset Management. Please go ahead.
Hi. Thanks for giving the opportunity, and congratulations on a good set of numbers. I mean, sir, Anthony mentioned that within next quarter you are expecting some solid updates to be there on the order inflow side. I mean, if you can throw, is it from the existing customer or a new customer, which segment would broadly this be? And what kind of quantum, what kind of value can this update be? I mean, last time when we had the solid order inflow, the order book had went up from 1,200 crores to 2,500 crores in a single quarter. So could it be similar to that, or will it be larger than that? Wanted to understand that. My second question was on the side, I think healthcare, last time you had mentioned that some OEs are showing inquiries. So is there any development happening on the healthcare side with some important OEs are showing inquiries? What is the development over there?
So Mayor, we only caught part of the question which I'll address, and then I'll request you to say the second part of the question. And please speak slowly. There is some issue with the audio, and we are not able to hear. On the first part of the question, yes, the order intake is expected to increase in the coming quarters. See, the nature of this business, you are going to get higher traction from existing clients. It's a long sales cycle with new clients. So while we will see that we've added 2 good logos during the year, and we are likely to add a couple more in the coming quarter, we will not see a lot of orders coming from those clients. It will slowly start, right? Small projects, NPIs, etc., and then it will get into volume production. So what you will see is from the existing customers only with higher traction coming in the coming quarters. There might be 1 or 2 logos which will come in and kick in, but those numbers will not be material to the overall order intake. Yeah, please ask your second question again.
Yeah, sure. And second question was on the healthcare side, some OEs were also showing inquiries on the healthcare side. So is there any development happening over there?
What side, sorry?
Healthcare.
So the question is regarding the outlook on the healthcare business?
Yeah, what is the outlook on that?
Yeah, so got it. So we are actually working a couple key opportunities, and the outlook is I would say the outlook is good. This is a smaller share of our makeup today, but we will be announcing a key client, and there is definitely some what I call significant upside potential with that. But again, that segment is one that we have focus on, and we expect to see some progress throughout the fiscal year. And you'll see more new logos come in that segment as well.
Sure, that's helpful. Wanted to understand what is the Bharat Electronics order book value currently at the end of FY24?
You mean the margin across the specific segment?
No. He's asking.
No. Just the absolute value of Bharat Electronics order.
About $55 million that is left in the order book.
$55 million. Okay.
Yeah.
And what was this at the start of the year?
It's about 95.
Okay, sure. Understood. And just one last question on this. How are gross material margins, which are there, that is after the material cost, they are roughly 21-22%. So how are, at the company level, how are material margins different for Bharat Electronics contract?
We also can't disclose customers.
So how are, Srini, the margins different for the BEL contract compared to the rest of the contract?
Yeah, it's substantially lower. We can't get into specific numbers, unfortunately, and disclose a margin, but it's substantially lower than the rest of the business.
Sure, understood. Thank you. And just one last question. We have repaid the borrowings in second quarter FY24, which is there in the presentation. But however, the finance cost still remains at 8.5 to 9 crores per quarter. So just wanted to understand why is that the case?
No, please look at other income and finance cost together, right? I think there have been some. Look, we have 2 kinds of loans. There's an internal loan and an external loan, right? And the repo rates have changed. And that's definitely one of the reasons why. And while we are clear that the external loan, internal loan is still in the books, and we have to keep it at the market rates, right? Plus, we've had some one-time forex loss that we have taken in the finance costs as well. So those 2 factors have. But we will see that going down as we move along in the next year.
Okay. So basically, the forex adjustment is happening in interest cost and not other income.
No.
Okay. Sure. Just one last thing on this, on finance cost. Can you just clarify, what was the external debt and promoter debt that was sitting on the books before the IPO, and after the IPO, what is the promoter debt and external debt which is sitting on the books now?
So we had roughly 160 crores external debt before the IPO. We have 0 as of now.
Oh, understood. Yeah, that's it. Thank you that's it.
Thank you. We have our next question from the line of Deepak Poddar from Sapphire Capital. Please go ahead.
Yeah, thank you very much for this opportunity. So first up, just wanted to understand, clarify, you mentioned, I think 3 years we are looking at 30% CAGR growth. So here we meant revenue, right?
Yes. Yes.
Oh, okay, fair enough. And you also did mention that on the margin front, we do expect to improve on a YOY basis, but it will not be as high as 11%-12%. I mean, if you have to see next 2-3 years aspirations, so any EBITDA margins aspiration we have that in 3 years, this would be our aspirational margins that we would want to see for our company?
Our aspiration is to continue to grow the margins. Like I said, there are a number of factors that play into what goes into the margin, which is basically the revenue mix, the sort of business that we do, and also the other engagement terms like the working capital norms, etc. Right? We could tomorrow get into a business which is again low margin but has very good working capital terms. So our decision making will be, the return on capital employed rather than margins, right? But with the current set of other variables, we expect the margins to improve. Right? I will not give a specific number, but we should see a year-on improvement.
Correct. And what would be our vision on ROC? Return on capital employed in the 3 years?
We want to get to about 15% initially, right, within a couple of years, and then from then on to about 25% in the steady state.
25% in 5 years?
Yeah.
Okay. And we have been quite vocal about our inorganic strategy, right? And I think it would be at a decent stage as we plan to have some update by the next quarter. So what's the size we are looking at in terms of revenue, the acquisition that we are looking at? What is the range or the size that we are looking at?
Our sweet spot is anywhere between, $40 to $100 million in terms of annual revenue for our size, right? We will not be able to give a specific size for the couple of targets that are in question right now. But from where we are today, I think anything that's in excess of 40 million up to 100 million is in the sweet spot for us.
Fair enough. And just one last thing on the R&D front. Annually, what sort of R&D costs that we incur?
We do not have any R&D costs on the books.
And I think anything. Do we have to spend anything on the R&D front, or is not required as per our business?
Not by design for the build to print work we do. In case of the build to spec work where there's a design involved, there might be some upfront investments, but right now that's not material.
Okay. Fair enough. I think that's it from my side. All the very best to you. Thank you so much.
Thank you.
Thank you. We have our next question from the line of Vinit Agarwal from Aditya Birla Money. Please go ahead.
Yeah. Good evening, team. Thank you for the opportunity. And congratulations on good numbers. So I have a couple of questions. First is, if I understand it correctly, on the export side or defense side per se, Middle East tension is driving growth. So as these things normalize, then can we expect some softness on the defense orders or growth?
No, I don't think the growth was driven by the tension in the Middle East. I think in general the defense spending is going up throughout the world. Right?
Yeah, no, exactly. We've been executing on a good sized defense contract, and the recent global updates have really just added to that business. As far as with other clients we've been working, we've been seeing an increase in outlook and orders in that regard.
Okay. And second is, apart from aerospace, defense, and medical segment, any other sector or any other segments where we are focusing on 2 to 3 years down the line?
Yeah, so really, so medical and industrial are the two other key sectors that we are going to continue to focus on. We are today have a much larger portion of our business in aero and defense. And, to be honest, those sectors have been, very good for our business, and the outlook in those two sectors are very good as well. So, yes, we do want to diversify a bit, but again, the aero and defense piece continues to be robust for us, and the outlook is solid as well. But yes, we do have a dedicated focus also on medical and industrial.
So would you like to give us some number or the mix which will be post after 2-3 years?
Yeah, so ideally we would like to get it, where 25% of the business is, 25% medical, 25% industrial, and then, maybe A&D make up, 50%. That, I would say that's probably a guess of where we would like to be in about 2 to 3 years.
Okay. Thank you so much, and all the best. Thank you.
Thank you. Ladies and gentlemen, we'll take that as the last question for today. I would now like to hand the conference over to Mr. Krishna Bodanapu for closing comments. Over to you, sir.
Thank you very much, and thank you very much to everybody for joining this evening. As you saw, the performance in Q4 was quite robust, and so was it for the year. Like I said, and I think like Anthony and Srini also reiterated, we're very confident in what lies ahead. We're seeing a very strong pipeline. The macro supports our business. We are in the right sectors, be it A&D, medical, industrial, where all sectors where the spend in the type of solutions and the type of products that we provide is only increasing. And I think we've built a fabulous capability in the management team with some of the best leaders in the respective segments, be it the operations side, supply chain side, go-to-market side, sales side, etc. So we have a full complement of the team in place now after about 12 months of really finding the right leaders and making sure that they're well integrated. So we're very confident for FY25. And I'll just end by saying thank you very much for your support over the last 9-10 months that we've been publicly traded as a company. This is our first full financial year, and I'm very sure that you will be pleased with the results we will again deliver, not just for this year, but also create a pipeline and a backlog that will take us into the same trajectory into the coming few years. Thank you very much for your support. Have a good evening, and we'll speak again next quarter.
Thank you, sir. Ladies and gentlemen, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.